Hi guys, how are you? Vladimir here. Once again, sorry I couldn't make it on the live trading room earlier today, but some health issues avoided me. You can also hear my my own voice, not on its best. Um, Also, other members of the family, so couldn't take the live room. So I make this video to sorry to share the little updates we have on some of the instruments, and basically well the expectations, the directions, and the action coming from that level. Let's start with the pound dollar, a pair that we have been waiting for sell opportunity. We had a triple cycle down, and we said we want to see two cycles up, right, back to this area, this area, and then have the trend line broken. You can see that we are currently far away from the trend line, which makes it not really tradable for the longer term. There is a bearish hidden divergence. There is a trend line right here, that this is a critical zone right here, right, the 141.20. That's the bearish hidden divergence, of course, I referred to. And if we drop lower to the 1 hour chart, we would figure out that this is a little, let's remove that here, that this is a little cycle by itself, taking us, you can see it right here, right, to around the zone of the 161.8, and that's where it comes critical. So if it is still about to make a down move, now I would say we should wait for a trend line here, but the problem is that there is no valid trend line here. The only last two candles that answer the conditions for two candles rules are these two, then they were not broken. Here we don't have a low, so make this trend line is wrong, make this trend line is wrong, therefore no sales yet. Yes, we want to see sales evidence, but we don't have them yet. And saying that, meaning very simple, if we break above the well, we are currently breaking the 50% retrace Fibonacci, we hold above it, we can even cross the 161.8, that makes it again tradable for both. For long term it would be not suitable, because remember, the idea is for long term, get 3 down, right, 2 up and breakout, then we can go and start enjoying the ride. If it doesn't happen, we must be careful, and being careful is paying attention to the retrace. That's why we are waiting for the breakout. Since the breakout doesn't happen, that's our critical zones. We break above it currently, so with all the wish on earth to start looking for sales, it is simply not smart at this stage. If the developments would be something like this, then of course we can say, aha, very good, sexy, but currently it's not, and that if we hold above the 50%, that makes the pound dollar tradable for both, and on the short term, because the long term will become invalid, which means if we get two waves to the downside, we can still try and ride the rally. I want to remind you that for the long term targets, we still have the 100, the 146, 145, and we have the 150 from the monthly cycle. So we don't rush into sales. Euro dollar, we remain bullish after this trend line here, spiked empty spike here, continue to the upside, also retraced more than any of the acceptable Fibonacci's levels here, make it irrelevant. Stay bullish. This trend line is a great follow-up. Every 2 waves retrace down provides a good buy opportunity, so keep an eye here. Well, we need to retrace down in order to go and look for possible buys. The good chances are for the euro dollar to reach 126, 127 zone, or, and I want to remind you that there is a chance we are for 133. I am very doubtful it's going to happen. I think 126, 127 zone is going to make it and block it. We are also finalizing here a special cycle, as you can see. So this is the area where I expect it to happen. Currently we are riding there, so enjoy the trading systems that go with it, and that could be triple B, buying on such opportunities like here after the 2 waves down, okay, on the short term, or SRS, or any other strategies that we use. Okay, great. So the next one to update will be the New Zealand dollar, but Jordan spoke about it. Same idea. We were expecting to see 2 waves retrace, and it never happened. That was our view. Triple, we expected double, right, and a breakout. Instead of that, we never got a breakout. Instead of that, what did we get? We get a wave that crossed through all the Fibonacci levels. That changes the game immediately and bring it back into bullish. I still don't think for long term it's worth to deal with that. It's only for short term. Currently the momentum is bullish, but the range is still in play of the weekly view. So yes, it's currently in a bullish pressure, but this area most likely would become critical. The zone of 075, 076. So short term rallies are acceptable, long term currently untouchable. On the Kiwi, still nothing, even though it's approaching the 107, 106.50. The one that really looks good, well, and behaves good, is the dollar franc that returned yesterday to the bullish, sorry, 2 days ago to the bullish view after breaking, not well, finishing the bullish view on the 1 hour chart. And we are into this development. 091, 090 would be the critical place where we should pay attention to. Meanwhile, it's bearish, like dollar yen. So far we go and we go and we go, and it continues to go here. It looks good, as simple as that. Cat franc is right where we wanted it to have it, guys. Pay attention to, we are now on the 161.8. We are now developing the divergence. We are now developing a possible second false break. That was one that might turn to be the second. So we need to see how it develops. For aggressive, if we break this trend line, we are looking for 2 waves retrace and another breakout, and we have the buys. For conservative, we will be waiting for the false break to happen, higher highs, which is, well, currently we don't have higher highs here, only here, and retraces and buys for the very long term. So we are approaching the levels. Don't go long yet, because it's not ready. It was bearish on the short term, it remains bearish on the short term. We are looking for the bottoms and to switch that. Euro versus the pound, as long, and I repeat, as long as we hold and respect this pattern, we are bearish. That's a bearish hidden divergence on a daily chart. 4 hour chart is a divergence by itself, end of a triple cycle. And yesterday we got the convergence that we were talking about. That's the sell here, and basically that's all. We got the 2 waves retrace on the intraday. This trend line was broken and got paid, and now we, well, bearish as long as this top holds. That's the bottom line. That's the view. Dollar Canadian is bearish as long as this top holds. Bearish hidden divergence came into play. 4 hour chart, continuing divergence or regular divergence, that doesn't matter how you turn it around and what you name it, what it represents is the most important. Keeps it bearish, so this one also is in the bearish direction. Euro versus the Canadian remains bullish. Euro versus the Aussie for me remains neutral. I got a lot of questions today about this one. Ready, not ready, what do we do? I say we do nothing, because it's obviously not clear. We can see few fast candles, then huge spikes. Well, from my point of view, that's untradeable. Pound Aussie, we are looking for the sells. This is the current trend line that we are following, and it's a bit far away, So we would like to see that improving, maybe doing something like that for us, and then we can start looking for the sells. Pound kiwi still no action, so I'm not going to discuss about this one. All the yen pairs, as I said, for me they're still under sells. Only short-term retraces, mainly for scalping, could be acceptable. I'm still looking only to sell rallies. My view does not change. New Zealand and Canadian getting closer to the 0.93 zone, and we need to start to pay attention to this level. The daily has a bearish regular divergence turning into fake convergence. 4-hour chart has a continuing divergence. 1-hour chart developing regular divergence into fake convergence. Currently, basically, the idea is simple. If we need to start breaking the lows in order to start selling. We don't have a setup yet. At the same time, daily suggests a bit further. So the way I see that, currently, little pullbacks, we are still into buys, closer to 0.93, maybe even to cross that further a bit. Gold remains bullish, silver remains bullish, oil remains bullish for the short term for us, as we accepted the buys yesterday, and we had the trend line broken right here. We got a beautiful breakout, and we are also this one, of course, and we have it running. That's where the divergence completed, and that's where the buys come into play. Indices, well, indices, with all the wishes to go and sell them, we need to be careful, especially with the Nasdaq. Why? Look what the Nasdaq does. It's dancing around the critical level of the reversals. You see that? And trying to cross that. No rush here. That's why I told you many times in the past, guys, wait. Our currently wait is for 2 waves on the 4-hour chart, which we did not have. Now it's still in the acceptable area here. Why? Because that was the size of the first false break on the downside. That's the size of the second false break we could accept. And if it makes turnaround from here, we are good for the sales. If not, we are not rushing. Dow Jones completing the 100%. Here, slightly higher, and of course the duplication of the where it is here, the 1-hour chart takes us basically to the same place. We start to have the divergences there, so that's where we mark the trend lines, and we want to see them broken. Once we have that broken, we have a trade. Same with the S&P, of course. They're basically following up the Dow Jones pretty perfectly. And same with the German DAX. Well, my favorite, as you know. For me, this is a big sell. 4-hour chart making the cycle. I want to see that correcting itself a bit deeper. A bit deeper means ideally to above 1250, but ideally is here. 1270, 12700 or 12800 before the crash. Anyway, that's the trend line we need to follow, and when we go below that, we can start talking about sales again. One stock that I want to pay your attention to, guys, basically adding it on the follow list. Let me just find where it's gone. Where did I put it here? Where is that? Probably another platform. Yeah, here we go. I'm talking about Teva, of course. Big money starts to come inside the Teva. I think that according to the development it had and the fact that it is bouncing, you can see here, almost next to the 261.8 of what's this Fibonacci? Where did it come from? Makes it very beautiful possible buys. The Teva, big money start to come inside it after all the bad experiment they had From my point of view, if we get anything like that or a range, I would start looking for the buys. Have it in mind. We want to see two waves down and breakouts after bullish divergences, taking it into the bullish direction. As per cryptos, I think it's good time to start cashing out. This is the Ethereum. We have a trend line right here. We have two cycles, meeting point not far away from there, as you can see. Okay, we have this area is right here next to the trend line, next to the divergence, two cycles. Most likely we should start to see at least short-term sell evidences here, and basically that's the same for everything. Ripple, which starts to smell like a potential possible reversal for at least short move down, and same with everything. Litecoin, Bitcoin, which crossed the 10,000 immediately. All of them are making the cycles and might be into the corrective mode. So I would definitely go and make some money with there. For those of you who are long, wait for a good retrace and start looking for new buys after that. The retrace, of course, and the good retrace. The divergence is on 4-hour chart, so the retrace has to be the 4-hour chart or at least the 1-hour chart into good two waves. That's all for now, guys. Once again, sorry I couldn't make it, and I wish you a happy trading and wonderful weekend to come, and I'll see you the next week. Thanks, Vladimir.